Hello everybody, welcome back. Let's have a look at stocks. So this is the S&P Futures market on capital.com. So it's not the real S&P, but it'll do for now because it's open for the moment. We'll have a look at it. So it's been a significant rally, hasn't it really? The bottom forming around these levels. Who told you about that? I told you about that. We are bullish still. We're floating above all major moving averages, safely within a Bollinger Band range. The Bollinger Band peak is 46.36. I'm not saying that we can't get to that level. I'm just saying that normally when we get reads like this on the money flow index, we are looking for a bit of a pullback. So what I'm talking about is the green line here, the money flow index, which is currently sitting at around 84. Previous highs over here, we had one over here at 82, another one over here at 83. You know, these are just rough areas. 85 and a half. Another one over here about 86, and obviously the big peak over here at 91.5. So let's have a look at what these have done for us in the past. So yeah, the red zone is the overheated zone. Above the red zone is absolute discomfort. We're talking about liquidity, basically, is what we're talking about. What's the liquidity? Is there a lot of money in the stock market? If there's a lot of money in something, it's time to pull money out. That's usually the rule, and this is why I use the money flow index. Why anyone should use it. You're looking for volume and liquidity, and if you've got stocks that you want to sell, you want to dump into that liquidity, these are usually the best times to do it because basically the money coming in can be yours in your pocket. So that's the way to think about that indicator. And so obviously it's quite high on a weekly, which means that there's a significant amount of liquidity in this market right now, ready to be pulled out at any point. That is the healthiest way to look at this. Doesn't mean that more money can't flow into it. People go crazy obviously when they see high prices. That's the point of that's how things go parabolic. Charts kind of break in a way when they go parabolic. This isn't parabolic. This is a very strong and sustained uptrend, one that has taken a lot of people by surprise. I thought there was going to be an uptrend. I took part in the uptrend, but I was surprised to see it get this high. And now that I see the money flow index this high on a weekly, I might be thinking that it's due to come to an end, or at least have a pullback. You know, I think it's just time. You know, there's going to be some liquidity taken out of the system and put into people's pockets. You know, this is the best time to think about doing it. Especially if you're a major player with lots and lots of cash, it's not a rug pull. It's just this is the name of the game, isn't it? You got to put money in when it's low. You got to take money out when it's high. Blah blah blah. It's just rinse and repeat. So I'm looking for that to happen. But even if it were to happen, where are we going to pull back to? So let's have a look. So we had those reads on the money flow index previously. How high were we over here? Did we see a drop? We didn't get a drop immediately, but we did get a drop eventually. See the money flow index get reset and then got picked up again. Prior to that, we found a peak over here. That peak did more or less mimic this top over here, and then we had a serious pullback into a 200 simple moving average, which did actually mark the low there. Prior peaks to those, we had this one over here. We did see a pullback, and this one over here, small pullback, but not the same. This is basically when we were having that giant sustained 2021 rally. So, kind of not quite the same as it is right now. And obviously, we can look at all these other peaks and see, obviously things can get nasty. Money flow indexes are useful. They don't spot the absolute tops, but they do tell you when things are getting relatively overheated. And like I tried to explain, think about it in terms of the amount of money that's in something, and in order to claim profit on something, you want lots of money to be there so you can. I use the word rug pull, but you know what I mean. So yeah, I'm looking for a pullback at some point. Now I would be looking for a pullback to come back down to maybe around this level, the 50 exponential moving average. Even if we came down below that, we came down to the 200 exponential moving average, it's just another area to buy this dip on. I don't really think it's going to come down that hard. But if it were to, we can measure out these moves just to give you a little insight as to what we might be looking at. If you were to be buying here, you might see a pullback to the Bollinger Band Center of around 6%. You might be looking for a 50 exponential of around 8%, or you might be looking for something more significant around 16%. I don't think that that's the case. I think this is still a very bullish chart, and to be picked up around any one of these areas is more likely than come back down to this area. Remember, these are all trending up. This is still technically a very bullish chart, which will sustain being bullish while being above these major moving averages, and we're above them all on the weekly. So it does look good still to buy the dips on, but personally, I wouldn't buy the first dip. I'd wait and see if we get a reaction, because if we do get a decent reaction, it's probably going to go on to new highs anyway after that. So on the daily, there's not anything to be concerned about on the daily. The daily is still showing further upside. We might see a pullback to 4,500. And that's your Bollinger Band again. We've had pullback to there, bounce, pullback to there, bounce. We might get another one there and bounce. The money flow index is resetting. It's still in the discomfort zone, in the red zone. So not really not really an area to be buying for me. I still think a deeper correction is probably more likely on this, given the weekly. The weekly is going to give you the bigger moves, like we've already measured them out. Around 6% or so is absolutely perfectly fine to see that. The 4 hourly, again, we started with this, and if you pull back to 44.60, that's fine. So there's a lot of areas around 45 to 44, but that we could see a temporary bounce from. But the weekly is the main thing to focus on, which for me, if you're buying and holding stocks, or for me, I am or have been buying and holding stocks since the beginning of the year. Some of those things I'm going to hold on to for a long period of time. They'll stay in my portfolio for decades. I thought those areas, the beginning of last year, the beginning of this year, and prior to that was prime time to buy and hold for like your pension. But day trading, probably best to sit back and wait for a pullback at this point and see if we can bounce from it or if we do go down lower. So stocks, although it's technically bullish, I think we're on borrowed time now. And the one thing that I would highlight to everybody is that the significance of this rally on oil. If we can break above 83, things will get pretty big for oil. Oil will go kind of crazy, to be fair, and probably straight back up by another $10 towards 93. Sounds mad, but it's true, unfortunately. It would be true. And a higher oil price means higher food and fuel, which is higher inflation, which is going to make the Fed think about what they're going to do next. Can they control the oil prices? No, they can't actually. It's out of their control now. They don't have no influence over that anymore. They never really did, but there's nothing really that they can do to do that. It's all the Saudis and Russia, and they've spoken about why the oil supply has been reduced to increase prices, because they believe strongly that there's a recession due. Global recession, which means less demand, which means they need higher prices, which means they're going to limit the supply and manipulate the prices. So that's that. That is that. It's a self-fulfilling prophecy, like I was saying yesterday. If you're going to do that, you're going to create a recession. So blah blah blah. It's all geopolitics at the end of the day. Oil is a weaponized commodity, big time. So that is your oil, and that is my expectation. We are broken bullish here, so we'll see what reaction we have around 83 to maybe even 84, but mostly 83. If we get a clean rejection from there, then maybe we can call it a day. Otherwise, a breakout from here will get pretty nasty, and at that point we might as well look at this oil as a crystal ball for what's going to happen to stocks and Forex and everything, because this will influence the next few CPI reads and all the CPI reads to follow if we sustain prices above 83, which means it'll be a bit of a ball ache really for anyone who's trying to have a bullish outlook on pretty much anything really, when the Fed's likely to have to adjust their central bank, so their outlook on rate hikes. So we'll see what happens, but we've not broken that area yet, and there has been multiple drives of bearish divergence. Each one of these have failed, by the way, but yeah, it's still a bullish chart. Major resistance at 83. Hold your breath, hope for the best, see what happens around there. If we do get a rejection from there, then back down to 73. So it's big ranges really, $10 ranges either way. 83 up to 93, rejection from here down to 73, and we stay back down within this range. And again, all these things can flip quite easily with just the words of powerful people who are in control of these assets really, and how they get values, which is mostly around the supply. Right, that is that. That will wrap it up for the day. So long story short, stocks bullish until further notice. However, you'd have to get your head tested to be buying at these levels, and keep your eyes on oil for what could be the way to read the future as whether we consolidate further or not. If you want to join the live stream, there's for the Patreon, there's links in the description below, and if you want to join Telegram, all of that is down there too. Other than that, hope you have a nice day. Take it easy.